of other experts. Siddhartha, first, your call in terms of the WPI data for the month of August, which is now a close to 5% decline.
Well, I missed the full details of the numbers, but
well, I'll just read it out to you. We have manufacturing, which is a decline of around 1.92%. We have fuel group also, which has declined, I think, around 4.5%. Food articles inflation, which is at a minus 1.13% this time round. So this compares to a food deflation of 1.16% in the previous month. We're just waiting by for the breakup, such as the vegetable inflation, etc. But just based on
I'll give you that.
Yeah.
Okay, I'll give you that. Vegetables has come in at minus 21.21. Remember, in the previous month, it had declined by minus 24.5. And pulses continue to remain on the higher side. So again, this month it's gone up by 36.4%. Versus last month also it was higher by close to about 36%. So these are two more internals. Other than that, you've got a big decline in potatoes, so that's come down by 51%. Onion has gone up by 65% on a year-on-year basis, and minerals has declined by 28%. You've also got a near 10% decline in fibers. Other than that, it's about a +2, -2% increase or decrease in all the other articles. And fuel, it's actually a -16.5% year-on-year decline in the fuel and
power. Well, that's because we
group.
had two price declines which came in the month of August as well, in terms of diesel as well as in terms of petrol. So that stacks it up for you, Siddhartha, as well as Rupa. We have a decline which is coming in vegetables, which is a decline of 21%. We've seen onions rise 68% this time round. But overall, those are a couple of statistics that we're working with. Your first thoughts, Siddhartha?
Yeah, the numbers continue to surprise on the lower side. We were expecting this particular print at minus 4.3%. The bigger story here is this is the 10th consecutive month of negative print, going deeper into negative. This number is sustaining at a level which is near 40-year low. So as a whole, it's very clear that there's a very strong trend of disinflation in the system. Even though these numbers are deep into negative, I'll not straight away jump into a conclusion of a deflationary situation in India, because overall there is some kind of decent growth momentum, as well as we don't see demand destruction to that extent. But the key point here is, despite some of our existing concerns like bad monsoon, weather-related concerns, otherwise in some places flood, even then we are seeing only very small pockets of upside pressure even in case of food prices, which is typically had been an upwardly moving factor in case of Indian inflation. So as a whole, what we are seeing, that the pockets of upside pressure is very, very limited. Food management had been pretty good. The currency had been by and large stable. And now we are getting into a situation where globally commodity prices are moving one step lower further. So as a whole, we might actually enter into a phase for lower for longer inflation in the coming months as well.
Okay. Rupa, what does this mean for you in terms of what we're seeing from a manufacturing perspective? Because yes, the global commodity decline that we're seeing is obviously reflecting in the WPI, but how does it compare to, say, an IIP, which is seeing some amount of pickup in terms of manufactured growth? So are we just seeing a decline in input prices, though there is still maybe manufacturing which is going on and that is still not reflective in the WPI? Is that one way of reading it?
As I have been saying on this show, regularly, I feel WPI is a better indicator of real activity than IIP, because we have been seeing a lot of, volatility in IIP data points. But having said that, if you see July IIP print, it is also partly supported by favorable statistical base. And if you see the the use-based classification of industries, we have seen further weakening of rural demand, and that is corroborated by all other leading indicators like tractor sales or two-wheeler sales or fertilizer sales, etc. So I'm not so confident about the underlying growth momentum. But having said that, I would say that deflationary tendencies have certainly increased, and this time the data has shown more negative strength than what we had expected. Of course, as Siddhartha said, because of significant easing of global commodity prices, but also the fact that weak consumption or demand indicators have also eroded pricing power of manufacturing companies to a great extent, and that is very appropriately getting captured by WPI print.
Okay. Kumar, Rachapudi, the senior rate strategist Asia at ANZ Research, is also here with us. Hi Kumar, afternoon. Does this number build a watertight case for a September rate cut either on the 29th or perhaps below? And what is the market currently factoring in?
Hi, good afternoon. Yes, of course, the lower than expected WPI will have some implications, but definitely what's more important for the markets going forward is the CPI number, which is supposed to be released later today. ANZ expects about 3.4%. Anything below 3.4, 3.2-ish kind of number will increase market expectations of a rate cut on the 29th September.
All right,
okay. The market is probably pricing in about 80% for now.
Okay. Siddhartha, any idea what core inflation looks like by what we've read out to you?
Well, I cannot say it right now, but in any case, it's very deep into negative, and the broad trend of very weak pricing power very clearly continues.
Okay. What is the food inflation? It probably tell you in terms of a trend on what we can expect from CPI today. I know there's a lag which comes through, plus it's only around 14% of the index for WPI. But in terms of the trends that we're seeing for pulses, as well as the fact that around 50% of the food articles basket has seen deflation this time, what can we corroborate in terms of what we could see from CPI this evening?
Well, the CPI number we are predicting at around 3.4%. So here also, this is the last month of very strong favorable base effect. After that, the number inches up a bit. But again, the broader picture here is that as a whole, we are continuously witnessing downside surprises in almost every print recently, barring the exception of one print in June. So what is happening here is, even though we all knew that the trajectory will be going down in the first half of the year and eventually will be moving up in the second half of the fiscal year, we are seeing the numbers are undershooting. And given that, again, commodity prices are moving down once more, you possibly see a softening in our expectation in the second half of the fiscal year as well. So only one point of concern, possibly in terms of the numbers, that as of now, last 1 month, we have seen the Indian currency weakening a bit, and the effect of currency comes with a bit of lag, in certain cases 2-3 months, or in certain cases slightly more kind of a lag, which will be having some kind of an offsetting factor. But having said that, the softening in commodity prices had been significantly higher than the weakness in currency. So overall, we don't see too much of an upside risk in the CPI trajectory going ahead as well. So as a whole, in our view, it clearly opens up a little more room for the Reserve Bank of India to offer some more easing.
All right, Rupa, let's get you into this then. You have been saying in the past that you don't expect the RBI to move from their cautious stance that they have been maintaining, and you were saying that maybe you could see a rate cut coming in only in the third quarter. Do you stick to that stance post this particular reading? And also, what's your expectations from that CPI number that's due later today?
Going by the undercurrents, especially the underlying trends in inflation trajectory, I now feel that definitely the space has opened up for 25 bips reduction in policy rate. But having said that, I still I would like to re-emphasize that that's not going to have much material impact on the real sector, because I don't think that majority of the banking industry today is in a position to pass on that to final corporate borrowers. If at all transmission happens out of moral suasion by Reserve Bank of India, it will be just a tokenism. So that doesn't carry much weightage for me. It may be a positive for financial markets participants, but it's certainly not going to help the real sector. My own CPI projection is around 3.5%, slightly higher than the market, but going by what's happening to food inflation trajectory, because a lot of spikes that came from onions, potatoes and other things, we have also seen a lot of softening in the prices of certain categories of edible oils, tomatoes and some other vegetables, so it's offsetting. But one thing is there that CPI also has higher weightage of services, and where we have seen the price pressures quite inelastic. So I'm not expecting CPI to be very low. It will be between 3.4 to 3.5 kind of a range. But yes, RBI certainly can reduce policy rates by 25 bips if one has to go by today's inflation prints.
Rupa, what are you anticipating in terms of food inflation trajectory going forward? Do you think that the spike that we've seen in, say, the likes of pulses as well as onions, which apparently are expected to come down in the next couple of weeks, do you think that it could possibly see a generalized food inflation from what we are seeing now, and the trajectory that you possibly expect as well?
Not as much, because as I told you, this time the government's food management efforts have been very good. Also, if you look at the Kharif sowing status, the way they have fixed minimum support prices, actually some of the very notorious items like pulses and edible oils, their sowing has increased quite decently. Of course, there are drought kind of conditions in some major Kharif growing states like Maharashtra and Karnataka, etc. But I think the precautionary steps taken by Karnataka state government as well as in Punjab, Bihar, etc. I don't think that food prices would show any spike, in the sense that given our comfortable buffers position for cereals and expected good crop of pulses, etc. There is still a scope for managing inflation in a better fashion, and that is getting reflected in inflationary expectations also. So I think on those fronts we are quite comfortably placed.
Okay. Siddhartha, considering the favorable base effect dissipates after August, does this print mark a trough according to you? And for how many more months do you expect a negative print on WPI?
Well, we need to see what comes out as a trend in global commodity prices in this particular context, and what comes out to be the trend in case of INR, because in case of WPI, the role of tradables is very significantly higher. So we need to be very clear about that, and where we are seeing some kind of knee-jerk adjustments are taking place at the moment. But if I need to hazard a guess, very clearly, even in the next quarter, we should certainly see that particular trend going on, if not for the full financial year.
Okay. Kumar, what is the tenure or the yields factoring in right now when it comes to September 29th, as well as the trajectory going forward in terms of further rate cuts?
The swaps market is definitely pricing in about 70 to 80% chance for the 29th September meeting. And going forward also, the market is actually looking for a bit more in terms of rate cuts, probably around 65 basis points in the next 12 months or so. So yes, the RBI probably needs to deliver that, and probably will deliver that if the inflation trend continues to be what it is right now.
So you're working with 25 basis points on September 29th, I assume?
Correct, yes.
And an incremental 65 basis points for the next 12 months following the
No,
20. Okay.
including the 25, yes.
Okay.
Correct.
All right. Siddharth, what does this WPI figure tell you in terms of manufacturing and in terms of growth? What's happening on that front, and what does this WPI figure tell you for that?
Well, very clearly there is an absence of pricing power in case of industry in India. And what we are seeing that even though there had been 1 or 2 months, there is a bit of upside surprise in IP. Basically, the number is hovering in low single-digit territory. So in a way, we are seeing a situation where overall growth momentum, if we see by in terms of the new GDP series, even if the number is showing a slightly higher growth print, we think it's still overall growth momentum is still not at the trend level. So as a whole, though there is a bit of recovery compared to the 4.5% in terms of the old growth series which we had hit a couple of years back, we haven't really gone back to our trend growth rate, and the recovery is still at a very, very nascent stage.
All right, Ekta, gentlemen, women, thank you so much, Siddharth, Rupa, as well as Kumar, for taking the time out and helping us analyze the August WPI inflation, which has come in at minus 4.95, which compares with minus 4.05 for the month of July. But it significantly undershot expectations on the downside because estimates were at 4.4% when the actual number is at minus 4.93. So disinflationary trends are getting intensified. For the markets, there hasn't been much of a reaction. The Nifty is still static around that with a gain of